Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, then please subscribe to my YouTube channel for regular market analysis. And do not forget to check out the Forex analysis playlist on my YouTube channel for the analysis of other currency pairs like Euro USD, GBP USD, USD JPY, and many more. So let's get started. So this is the 4-hour chart of gold USD in front of us right now. And as we all know, after the yesterday's US sales report, retail sales report, there was a huge rally on US dollar. But surprisingly, we did not witness any heavy selling pressure on gold. Whereas in currency pairs, the Euro USD, GBP USD saw heavy selling pressure. The support levels were shattered, but on gold we did not see any heavy selling pressure, though US dollar was going up. And right now you can see that gold is standing at 1789 level. So let's try to understand what is going on in the chart of gold USD. Let's try to understand the levels and all. Okay, then we'll be jumping to the strategy part. Clear? So first and foremost, you must know that 1790, okay, 1790, which was acting as a very important support level for the gold in this particular portion in the previous one, has turned into a resistance right now, which in simple words, the support has become resistance right now. Okay, and right now you can see that market is just standing at the resistance level. Clear? That is point number one. The second important level on the gold USD chart is 1750, because when there was a sharp fall in the market, okay, the gold broke the support, but when it went up again, it became the resistance, and then again it became the support. So it was support, then it became the resistance, then it became the support again. So ultimately the bottom line is 1750 is also an important level. So in the chart of gold USD as of now, okay, the two important levels are 1790 on the upside as the resistance and 1750 on the downside as support. Okay, so right now we only need to concentrate or understand only these two levels. So first and foremost, if market comes down and takes support at 1750 level, then definitely it's a buy call. But right now you can see that market is just standing at 1790 level. Market is standing at resistance, and generally we have the notion or the theory that buy at support, sell at resistance, isn't it? Yes. So we should short the market as per the basic rule, is not it? But this is not the right position to short the market, because you need to understand the market psychology here. See, though market is standing at the resistance here, but do you think that market is struggling? Rather, you can see that market is going up in in an upward manner. You can see that market is constantly going up, making higher highs here. Don't you think that market is being dominated by buyers? Okay, if I just remove the drawings here, okay, if I just remove the support and resistance levels here, and if I just ask you to just focus on this particular portion of the chart, then you can clearly see that this market is heavily under the dominance of buyers right now. Yesterday there was a huge rally on US dollar. Generally we see that whenever dollar goes up, gold goes down, but yesterday dollar was going up but gold was not ready to go down. So which clearly signifies that we have some buyers present in the gold chart right now, and they are extremely interested in taking the market upward. As a result, though market is standing at resistance right now, still market is not ready to go down. Try to understand the market psychology here. Therefore, there is a good possibility, okay, listen to me carefully now, there is a good possibility that market will be going up or market will be breaking this resistance, because see, resistance does not mean that market will be reversing. There is no hard and fast rule. Always keep in mind, support and resistance levels are not permanent. Okay, support and resistance levels are not permanent. They are temporary. Okay. Therefore, there is a good possibility, looking at the overall structure of the market here, there is a good possibility that gold will be going up. Just keep in mind that in case there is a breakout also, just wait for at least 4 to 6 hours. Yes, you need to wait for some time just to get the confirmation whether the resistance has become support or not. Whether the resistance has become support or not. Once you get the confirmation that gold is trading comfortably above 1790 level, then you'll get the confirmation that yes, at last the resistance has become support, and you can click on the buy button. On the other hand, if you see market failing to cross the level, or if you see market making a red candle here, then also do not short the market immediately. Okay, do not short the market immediately. Wait for some time and see. If you see that market has formed a big red candle, then you can go for shorting the market. But overall, still I'm saying that this market is extremely bullish. Therefore, be very careful while shorting the market, because just the theory is simple. If there are 100 traders present in the market right now, at least 75 are on the buy side and only 25 are on the selling side. So it is always wise to take the side of the 75 traders, because they are very much strong. So therefore, in a market condition like this, it is always wise to take a buy position only, as the buyers are dominating the market right now. Therefore, in case until and unless you see a big fat red candle here, do not short the market. And looking at the present structure of the market, it seems that market will be going up from here. And on the other hand, if there is a heavy fall and all in the market, just keep in mind that we have a good support at 1750 level. So if you find market in the at 1750 level today, tomorrow, next week, doesn't matter, you can go for buy at 1750 level if market bounces from here. Okay, and if we go to the forex sentiment meter here, you will find the forex sentiment meter on my website abhilashhazarika.com under forex 101 section. So in the forex sentiment meter, you can see that 55% retail traders have taken short position and 44% retail traders have taken long position. So it seems that retail traders are also very much confused right now. They are also not sure in which direction market will move. For example, you can see that GBP NZD here. Here 69% traders are thinking market will be going down and 30% are thinking market will be going up. But in case of gold USD, they are confused. They are in dilemma in which direction market will be moving. And one more thing, recently I have launched a pro trader membership program where you can be a part of my analysis, where I'll be sharing the best market, best trading opportunities available on the market. And if you want to know more, then you can just go through this information. Anyway, that's it. Right now you should not go for any trade here. Okay, wait for the market. Okay, wait for the market to give you a confirmation. If market crosses the resistance, wait for 4 to 6 hours and then go for buy if you find market trading comfortably only. On the other hand, if market fails to cross the resistance level and market forms a big fat red candle here, then only short the market. Okay, whatever it is, always see whether the candles or the candle that you see in front of your eyes, okay, are convincing or not. If you see a small green candle above the resistance, do you think that buyers have the potential to take the price up? No. So you'll have to understand the market also. You'll have to understand the market psychology as well. So this is it. Hopefully you've understood. If you have liked the video and found the video informative, give a thumbs up and subscribe to my channel for regular market analysis. Thank you so much. All the best. Take care. See you tomorrow again. Bye bye.